Ramesh, first, thank you for joining us and thank you for finding time to ring the traditional BSc bell. Is it a coincidence that we both are dressed for Valentine?
Oh, but not coincidence. Why do you call it? We prepared for it.
We're prepared for it.
Let
me put it that way. Okay. Let's talk about the good part and the bad part. The good part is that the rural economy is no longer contracting. The bad part is that it is not expanding. There are concerns which are visible in terms of what's going to happen to the demand side, but in terms of fresh NPA formation, one is getting a sense that at least fresh NPA formation has stopped.
So you're right, and I don't want to call it as a good or a bad part. I think it's just situational, right? I mean, we've been in this market for 20 years. When have we not seen this? Yes, have we seen it across the country at the same time? Possibly not, and that's what we're going through. But I would very strongly think that it's nothing new. I mean, it's happened for different reasons maybe. But what we hear from the customer though now is, the sentiments are pretty positive. At least the monsoon cash flows have been very supportive. The farm cash flows have definitely improved over the third quarter to fourth quarter as we see. And I would therefore think that the sentiments are returning positive, and with little infrastructure that will commence in different states, I would think the rural should do well.
You have a 20-year-old history, and these situations have also existed in the past. But ever since you've got listed, earlier it was very easy to predict your numbers. But in the last couple of years, there has been a lot of volatility in your numbers. Some are because of macro conditions, some are because of external conditions. But your numbers are getting slightly more difficult for an outsider, like me to predict. Why is that?
See, if you look at pre-listing, we might have been almost a single product company, right? We were just doing maybe Mahindra vehicles, and then we added tractors to that. So it was much more easier for someone to predict because you knew what's happening out there. We de-risk ourselves by going to more geography and then more products. So that got in different segments of customer, and they not necessarily behave the same way like a tractor would have behaved earlier. So that's one of the reasons why this becomes. I think also the reasons are, earlier it was so easy to understand the first half in rural is not as good as the second half is. With the delayed monsoon, the crop money gets delayed. It moves from third to fourth quarter. So everyone kind of understands, will it be good in the third quarter? Suddenly you see a shift happening to the fourth quarter. Over a period of time, the rural cash flow has also moved from just farm dependent to also infra-based cash flow. So when it moved into first time into infra-based cash flow, I think it was more stable. Every quarter had some numbers coming in. Once it gets to a larger size, there are some delays in government payments or contractor payments, etc. I think the whole thing moves out. I think the fundamental reason that one should understand is almost all customers that we work with are earn and pay customers. They are not fixed cash flow customers. So it will always be this challenge to predict earn and pay segment as to when is this earning going to come in and how are they going to discharge their liability. But what's important to look at a model like this is look at a contractual period of 3 years. You will never find we make less money than we promised to make.
Along with your Q2 numbers, the communication was that, look, the worst of the print is behind Mahindra and Mahindra financials. The darkest dusk before the dawn is over. But then demonetization happened, and the numbers suddenly they started looking different. Now, the demonetization effect at a broader level, at the macro level, seems to be adjusting. Are you getting a sense that Q4 onwards things will look substantially better?
So demonetization did what to us? One is, 8 November to end November, none of us knew what exactly should be our reaction. How do we take it forward? What do we do? Customers were kind of guessing as to what they should be doing. I think December showed a very different number to us. Customers started getting used to this. Money did come back into the market in some form. So you're right, demonetization impact either has got accepted well, a new format has been found, and going forward seems to be definitely good. But we shouldn't forget that ultimately, again I'm repeating, the customers are earn and pay customer. Their overall transaction volumes have to go up. What we see now is the farm cash flows are pretty positive. I think the money is coming in. What was to come in the third quarter possibly has got shifted to the fourth quarter. I think the January crop is good, and therefore we do think that the flow of money from farm will definitely be good. I think another important thing to look at is, look at state by state. These businesses are no more to be looked at India as a whole. So we kind of resource ourselves. If some states are doing well from a growth perspective, we resource ourselves well there. And if some states need higher attention from a recovery perspective, then we resource ourselves differently in those states. So you will find us adjusting to this. So these are models which are getting into what's your ability to quickly readjust to the new normal.
Unlike before, you had a stable situation, you put a model in place, work around it for 3 years, 4 years times. Now I think it's getting to a situation where what's your ability to kind of quickly react to a changing scenario, how fast can you change, what's the flexibility of your organization and the people's competence and capability. I think anyone who does all of this well, I think will still have a great future out there.
So when do you think the new cycle will start for you? When I say new cycle, A in terms of demand and B in terms of recovery. I mean, the turning point for a NBFC is when bad loans, they become good loans and fresh demand kicks in.
So I don't think we've had too much of pressure on demand. Yes, if somebody wanted us to grow at 25%, we have not grown at that. But I think at the end of the day, we are enablers and think everyone has to sell more. But for example, the tractors did well. We also grew in tractors. Our market share went up as well as volumes went up. So if you look at our book, we still have a growth rate of anywhere between 12 and 15%. Now someone is used to Mahindra Finance growth rate of 25-30%, continues to think that we are not growing enough. And I want to correct that impression to say on a large book growing at 15% is a good enough growth.
So 15% is the new normal for you now?
I won't say so, but 15% in the current situation is a great growth. Is that the way I would put it? Yes, you can get back to a 25%. I mean, look at for the same volume, the disbursements are low because the discounts on the product is high. So if the discounts vanish, you get another 5-7% growth happening. And then of course the value of the price goes up of the tractor or cars or anything, then you get a growth and then the volume kicks in. So I think asset side growth, I'm not too worried. We've deeper penetration, large customer base. We are in close to 300,000 plus villages in this country. So why should I worry much about the growth out there? As far as recovery is concerned, historically, if you look at our book, NPA might have climbed up, climbed down, whichever way it has happened. Our credit losses have never gone beyond 2.25, 2.4%, which is well priced into our pricing to the customer. So I'm not again overly worried about the peaking of NPA, like the norms changed from 150 to 120, we moved to 120. We've not changed our aggressive provisioning that we were doing even otherwise. We will need to move to 90. So I don't think one needs to look at NPA as a standalone number to say, oh, is the NPA moving up? Let's look at if the NPA is moving up, what's the coverage that you've got? But eventually, is the collateral competent and capable enough to protect the principal? There we are pretty confident because loan to asset value is the key to success of this business. So if you have kind of restricted yourself to somewhere around 75-77% or even go up to 80% and someone repays 10 installments on a 3-year or a 4-year period, I think we are well protected and therefore that is not the big worry. Yes, situationally, cash flows need to improve, money starts coming back, then past provisions bring back your profits and future provisions don't need to be these aggressive.
Now historically your book has doubled in 24 to 28 months. But that was when your book was, when you're growing at about 25%. 25 has become 15. So can I assume that your book now will double in 3.5 to 4 years, not before that?
So if it is 15%, yes, you're right, it will take about 4 years or so. But I continue to believe that this growth rate will change as the volumes increases. Like, last month we saw Maruti retail numbers were good, so we got the benefit of it. We normally do about 8,000-9,000 vehicles, we crossed 12,000 vehicles. So, overall car market for us also growing. Mahindra UV numbers are growing for us, tractor numbers are growing. Pre-owned vehicle will be a growth story for us. We're still not a significant player when it comes to commercial vehicle construction equipment. Once the infrastructure story unfolds, I think we'll get benefit of this happening as well. I think to get back to a 25% kind of a growth story, 2-3 things need to happen. Overall volume needs to improve there. I think the discounts on products need to vanish. If this too happens, even without a price increase on the vehicle, I think the growth rate will return to some new number. We're putting in place a direct marketing initiative where we reach out to our customers and through them we are actually growing more business, right? So there clearly go to a customer, he gets you more customer in the village. So I think I'm again not too worried about when will we get to 25%. I think we are ready to get to there. If few of these fundamentals change, I think getting to a 25% should not be a challenge. If that happens, going back to doubling in 3 years should happen.
But 15% is there. You're not going to grow at lower than 15% because these are tough conditions. Whatever could go wrong technically has gone wrong for you. Agrarian income has been under pressure, rural infrastructure has not picked up, and yet you're growing at 15%. So 15% is the base.
I would think so, but except that one should know we are at the end of the day an enabler. If somebody is not doing well, we can only do so much.
Plus minus 1 or 2%, but you'll hang in there.
I think if everyone sells the numbers that they are doing today, we are pretty sure that our market shares won't fall. If any, our market share is only growing. And therefore, if that is converting itself into 15%, I think the answer is yes.
Okay. So let me construct a couple of scenarios. There are two scenarios which you painted for us: agrarian income or agrarian cash flow and the rural infrastructure sector. We can be reasonably confident that the agrarian cash flows, because of decent crops, at least for next 6 months, they would be predictable. Let me be optimistic and talk about the infrastructure sector, which is likely to pick up because of government spending. So if the agrarian income picks up, what happens to you? If the infrastructure infrastructure picks up, what happens to you? And if they both pick up, what happens to you?
So if you kind of go back into history, when both were doing well, let's say from somewhere between 11, 12 to 13, 14 times 3 years, we saw almost in every state both of this doing well possibly, and therefore we had a great growth story from 10 onwards. Right, and we have had situations in the past, and let's take some state in particular. Let's take Maharashtra or take any state of that matter. If the monsoon doesn't do well, I think the sentiments go low, and I think about 40-50% of the cash flow does come from the farm cash flow. So therefore, to that extent, things go slow, they start getting delayed. So when you said 6 months, farm cash flows are expected to be good, we reasonably believe 50-60% of the book will normally behave in a very decent manner. Then look at each state as to which state is spending on what on infrastructure. Look at Andhra, it's done well for us. Look at parts of Maharashtra, Rajasthan, parts of MP, UP, Bihar. So we've had states which have done well, and we have had states in the past like Tamil Nadu, etc., going slow for us. So I think if the infra at the state level starts picking up, may not be a large project, but even a continuing work there, the labor and asset absorption, if it happens well in state level, I think our book should do normally well, because we are not financing the large contractors, nor are we really financing the marginal customer. Our customers are someone who can afford to bring a 25% margin on any asset that's close to about 1.5 lakh, 2 lakh plus. So if that kind of a customer is what we are supporting, I think he looks for a stable earnings on a monthly or a quarterly basis for him to be able to service the loan. Even today, if you look at our NPA numbers, while it may be little elevated, but you look at the progress in those numbers, customers are, at least 60% of the NPL customers are repaying their installment. They are not earning enough to pay for the past. So this stability is what we will look for, and then once the cash flow improves, they get corrected.
Okay, closing comments now. Are there any key categories which you've identified which will grow at 100% or 75% for next couple of years?
So if you look at our pre-owned book, we are at about 8-10% of the book is pre-owned vehicle. We think that's a large opportunity because, and I'm not talking of commercial vehicle pre-owned, that's not where we are, but tractors, utility vehicle, cars. So we have large number of customers, about every year, at least about 2.5-3 lakh customer contract mature. So we are putting in place an arrangement where when they sell their vehicle to someone else who wants to buy, we know the vehicle, we know the background of the vehicle, we know the customer who's selling and the customer who's buying. So I think that's a segment that will help us grow bigger and better. That also comes with a much higher margin, while the value of disbursements could be much lower. But that segment is something that we will see grow from a current 10-12% book going up to maybe 15-18%.
15-18%.
At least 15% of the book to start with before it goes to 18%.
That's why spreads are higher naturally, because you're in a condition to lend more efficiently.
Exactly. So we go more deeper, we engage ourselves with the customer. And in difficult times like this, customer choose to buy a pre-owned vehicle before he can go and buy a new vehicle. So it's a great opportunity.
If I talk to FMCG companies, they're betting on GST. If I talk to infra companies, they're spending on government spending. If I talk to railway companies, they're spending on renewed focus of Government of India on defense and on railways. What could be that big change for Mahindra Financials from, whether it's monsoon, whether it is agrarian income, what is that big thing which will give you a frog leap?
So if you look at, I repeat myself, we are an enabler. So we look at who's planning what. Yes. So we look at what is M&M's plan in terms of vehicle launches, how deep are they going, how many dealers, how are they doing, tractor, what's the bet. We look at Maruti's launch. Then we look at everyone else who's coming with a rural vehicle. We're now working with Nissan, we're working with Renault, we're working with Toyota, we're working with JCB. All of them are looking at a customer out there. So what is it that we are looking for? We're looking for all of them to really penetrate deeper. We help some of them to go there, and some of the products attract customers there. I think the two together makes a new volume there.
So you remind me of this old Hindi movie dialogue, Roti Kapda Makan. Yeah. That is what you always believe in.
Precisely, because we are giving product loan which is livelihood. Yes. We give shelter housing loan. We give insurance as a security loan. We are willing to give them personal loans to meet their personal aspirations. I think that's our job.
Really appreciate your time. Glad you could join us, and
Thank you.
thank you for making this memorable for us.
Thank you so much.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.